This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Well, this week we turn our attention to Sirius XM, SIRI, the ticker symbol, as the satellite radio company tries to deal with the trouble in the auto industry, a consumer who's not spending, and its own debt. In the wake of the satellite radio merger of Sirius and XM, the company stock has plunged 90% this year. That has several analysts wondering if Sirius XM can even last much longer. Among those analysts, our own Tracy Reinick, who's our value stock analyst at Zacks.com, and Michael Vodicka, who analyzes momentum stocks for us. And so, Mike, we're going to start with you first this time around because the picture is so compelling, this chart that you've brought with you, which you can show anytime you're ready, Mike, as far as I'm concerned. Look at that. It just fell off the planet practically.
Well, on a macro level here, I look at Sirius as kind of being a company/technology that was really caught between two worlds. The old world being dominated by FM, AM radio, and CDs and even tape cassettes, and the new world being dominated by things like iPods and web-enabled handheld technology. So between those two things, I don't see a lot of space in the marketplace for this kind of technology. That the customers are used to getting, radio for free. They're not really, keen to paying for radio. And the way that's played out in the chart, as you can see here, is the share price topped out in March of 2000, right before the big technology bubble burst. And since then, it's really been kind of like a slow grind lower. More recently here in 2008, same thing applies here. It's just kind of been a steady grind lower. As of yesterday, which was November 19th, share price closed at about 17 cents per. So it's been a pretty steep slide.
And that's a high, a recent high that it hit in the share price.
That's right. Yeah. And the reason the reason that the share price is taking such a big hit right now is their company's losing money every quarter. Sirius XM has lost money in each of the last 4 quarters. And then beyond that, the analysts they're fairly bearish on their projections with their capacity to earn money. The current year estimate is negative 30 cents, and the next year estimate is negative 15 cents. So it's not a very pretty picture moving forward for Sirius XM.
So we could be looking at a stock price of 0 here sometime soon, below 0.
Possibly. It really depends on...
We can't go below 0, obviously.
It really kind of
0.
depends. It kind of depends on their short-term liquidity here, and then on a longer-term basis, solvency, which is something I think Tracy can talk a little bit about.
I mean, how did it get to this point, first of all? And second of all, is 0 out of the question as far as the stock price here?
Well, as Mike said, Sirius has been losing money for the last several quarters. They only merged with XM in this last quarter. So,
see, and this is what surprises me, because when they were 2 standalone companies, they were doing fairly well.
Yes and no. They both were bleeding money when they were 2 standalone companies.
Were they really?
Yes.
Not at this extent, though.
Not quite this bad, but they were. Yeah. So it was kind of a merger of 2 weak companies to try to make something that works.
So they had a lot of debt out there individually.
Yes.
And then they collectively put that debt together.
Right.
And made even more.
They were really shooting for some synergies here that we really haven't seen come to fruition yet.
Right. And they're cutting a whole bunch of their workforce because of the merger. They expect to cut about 22% going in here into the end of the year. And, they took a huge charge this last quarter for the merger-related expenses. So they actually took a charge of $4.8 billion in the quarter, which is, pretty extensive.
And, of course, their reliance on the auto industry didn't help them either.
Right. And we don't know the extent of how bad that's going to be because the quarter was only through the end of September, which September was bad. But as we saw what happened with the auto industry numbers in October, that really fell off a cliff. Obviously, no one's, if they're not buying the cars, they're not getting the Sirius. The one good thing...
And even if they wanted to buy cars now, can they get a loan to buy the cars?
Well, yeah, that's another
the question.
Thing. Right. I mean, the company is actually kind of optimistic going forward here. Their subscribers were up 17% for the quarter from a year ago. And, combined, when you combine the numbers. And so that's good. Their churn rate wasn't bad. It was about 1.7%, which is pretty low for the paid subscribers. The problem is their average pay per month is about $10.50, and so how long or how many people are going to be willing to pay that money out every month going forward here with the economic conditions? Because that's a really discretionary item, as Mike said. How many people are, going to be paying to listen to the radio if they can eliminate something? Right.
Well, the company's optimistic because they're going to ask investors for approval to sell more stock at the company shareholder meeting, which is in December.
Right. They need to raise cash. I mean, they have about $1 billion worth of loans they need to refinance next year. So far, from what they've said on their conference calls, they're not worried about it. But as we've seen with everything we've been discussing with various companies here, anytime you have to refinance any debt right now, it's an issue.
Well, they have debt that's in the stratosphere.
Well,
And so the question becomes, with that big amount of debt, with auto industry troubles the way they are, and consumers who don't want to pay to listen to the radio, is there going to be even any demand if they wanted to, get more stock out there?
Yeah, it's going to be
who's going to want it?
Exactly, it's going to be really hard for them to get their hands on money based upon what we're seeing with their, the balance sheet, the numbers. The lenders right now, they don't want to lend to even companies that are profitable. So you're looking at a company that's not profitable. It's going to be hard for them to get their hands on some dollars.
They do have some cash on hand, though. They have a little over $300 million, but that's down from a little over $400 million a quarter ago. So,
yeah, but they're running out of cash real fast.
Well, they're going to burn through it.
In the first 9 months of this year, they had negative free cash flow.
Right. The company, interestingly, is optimistic going forward. They have said, with the slowdown in the auto industry, 2008, they expect their subscriber base to only grow to about 19.1 million. It's at 18.9 at the end of the third quarter. Then, 2009, they also see it being fairly slow. But they see, revenues increasing in the next couple of years if they can survive the next two years, basically. But as we've seen with the numbers, I don't know.
All right. Well, we will have to keep an eye on this one for sure. Do either of you own this stock?
No.
I have to ask that question. As dumb as it may sound, I have to ask that question. And if you have a stock in the news that you would like us to consider for kicking around here on Stock Talk, why not email us your suggestions to mailbag@zacks.com. We look over all of the suggestions, and some we take and some we don't. With Tracy and Mike, I'm Terry Ruffalo.